And so if you're working with someone who, isn't practicing and you're serious about financial independence, this kind of mistake, working with someone who doesn't know what they're doing, it could cost you not only a lot of money, but a lot of time and a lot of energy, and could really hurt your long-term results. And even worse, it might make you feel like this isn't for you. So today we got a special treat for you all. Sometimes you have to understand life's always happening for you. And today, Jeremy, who lives in Savannah, I live here in Ocoee, Florida, and we're coming together because we got the Nelson Nash think tank here in Orlando. And we thought, what better way but to have Jeremy. We were going to film at the think tank, but I said, why don't you come by my place? We'll film together. We'll be on camera together side by side versus being in two different panels. And I think it'd be pretty cool, right?
Yeah, absolutely.
And so my wife let him in. I wasn't so sure about that, but now he's here. And so now we're going to talk about some good stuff today, Jeremy. What are we going to be diving into?
So today, all the Nelson Nash Institute practitioners, so the IBC practitioners that are out there, we get together once a year. This year is being hosted in Orlando, Florida. And it's really about, honing your craft. As practitioners, we go through a very rigorous training process, a selection process, but it helps us kind of refocus on what it is that we do and how to do it better. So with that in mind, we thought that we would just share an episode with you on why it's important to work with an actual IBC practitioner.
Yeah, and why, and I think on top of that, why was it important to us when it's not a required thing, right? It's not like we're not CPAs, we're not financial advisors, we're not people that have like all of these number alphabet soup after their name to be able to do this. But we chose to invest our time, our energy, our money to really go deep into what infinite banking truly is, why Nelson Nash thought the way he did, and what it does for all of you. And so we thought it'd be super cool, not only to talk about why it's important to work with people who are actually practicing and are certified Nelson Nash Institute practitioners, IBC certified practitioners, but why it's important to us, why we went down the rabbit hole even deeper than after reading this book, which if you guys haven't read it yet and you're watching us on camera, get this book. I can't physically make you do it, but if I could, I would make everyone read this 91-page book. As I've been flipping through this the last couple of days, there's a couple pages that only have one sentence. That's nuts. They could have just used smaller font, Jeremy. So I don't really understand some of that.
Yeah. And if you're listening on a podcast, he's holding up the book, Becoming Your Own Banker, the 5th edition by Nelson Nash.
That's why we have Jeremy here to keep me in line when we have people listening and watching. So we're going to talk about just one thing I started leading into is we go through an interview process just to be able to go through the practitioner's program. They bring you on camera and you have a panel of people talking to you. You have Carlos Lara, who's written books and is an economist with Nelson Nash. You have David Stearns, who now runs the Nash Institute and was, is Nelson's son-in-law. And it was a little intimidating, Jeremy. Like my experience was like, oh, you think you know a lot about infinite banking? I'm like, I hope so. I've talked to thousands of people, but I don't know what I don't know, right?
Yeah, so. Exactly. You don't know what you don't know. And that's what's great about coming together with other like-minded practitioners. Between, I think, North America and Canada, there's about 400 of us. It's a very small community. And being able to, share the wisdom and the insights and truly design banking policies that are unique to the people, right? That at the end of the day, this is not a cookie cutter experience. It's individually tailored to every single person. And by the way that I practice infinite banking is different from you. And it's going to be different from other practitioners here.
Yes.
So how can we be better at our craft? Well, it's gathering once a year to just talk with people in our industry.
Yes. And if you're on a road to mastery, so you're listening to us because you're looking, how can you master your financial game? How can you build that foundation that is going to set you up and your future generations? Because the first principle that we all agree on is long-term thinking. Think long range, like Nelson would say, or long-term thinking. And what you don't want to do, we're going to talk about some of that today too. You don't want to work with folks who aren't practicing. Like Jeremy was telling me a fun story about, you're not going to go to somebody, right? Go ahead, share this story. You're not going to go to somebody for advice that doesn't do the thing that you want to get good at.
Yeah, I don't take, as an example, I don't take financial advice from broke people. I don't. Like, if I'm in an Uber ride and a guy is giving me a stock tip or financial advice, are you going to trust that person? Like, I wouldn't personally, but there's a lot of TikTok, there's a lot of Instagram There's a lot of false information that's out there. And by going through the actual program, the training program like we have with the Nelson Nash Institute, you actually have the seal of approval. The
Yes.
people who set up the program to teach infinite banking in its pure form, that's why we're here. So why does this episode matter? If you look at it, in the financial industry is full of advisors, people who sell policies. They may not understand what's good for you, what's good for your life. This episode really exposes a lot of the major differences between an IBC trained practitioner and a traditional financial advisor. It's going to expose how to identify different red flags and who is selling you probably a policy versus designing you a banking system. And you're going to look at the dangers of index universal life, IULs, and how those are being falsely marketed as IBC solutions. We're going to look at, should your advisor practice infinite banking? If they're going to be designing you a policy, do they practice what they preach? And how working with the right expert ensures that you're creating a banking system that's tailored to your financial goals.
And that's it. You want to make sure that all the time this is about you and your journey. Whoever you're speaking with should be more concerned about your success than anything else, because that is the end game. It's got to help someone make progress. And we're talking about why we're here. We're here because we're both committed to mastery. We're here because we want to be the best in the world at doing this. Now, there's 400 other people doing it, and they're all amazing as well. But guess what? It's like, when we go and we hear one thing, it makes us all better. It is that rising tide lifts all boats, and we're all committed to really practicing this and teaching this the way the Nelson saw it, bringing banking back to the you and me level. It's like everything Jeremy just said, it really starts with your commitment to your financial mastery. And so if you're working with someone who, isn't practicing, and you're serious about financial independence and making, this kind of mistake, working with someone who doesn't know what they're doing, it could cost you not only a lot of money, but a lot of time, a lot of energy, and could really hurt your long-term results. And even worse, it might make you feel like this isn't for you.
I completely agree. So today we're going to help you learn about how not all whole life policies are designed for infinite banking. They're just not. And the traditional life insurance agent, guess what? They sell a death benefit. We concentrate on the cash value. We concentrate on the banking functions. It just happens to be that whole life, because it predates the IRS tax code, is great for banking. And Nelson Nash kind of stumbled across it himself and then really started digging deep into it. And through the book, Becoming Your Own Banker, he wrote about it. And he took something that's been practiced by wealthy families, major corporations, banks for over 200 years, and brought it back to the you and me level, to the public, so that way we can all benefit.
Yes, and like you're saying, we are designing this for banking, but again, something I've been saying a lot to folks is, at the end of the day, it is permanent life insurance. It is boring old permanent life insurance that we are using. That is the foundation. And so no matter what, you're going to have a death benefit. No matter what, we hope that you have someone you love in your life, something that you care about, because you're going to have that as a guarantee. And it's not the focus of today's call, but I just like to make sure that people understand you have to go through the process of being approved by a mutually owned company. You want something that's solid. This is part of your foundation. So you want a company that's been around for and profitable for 100+ years.
Absolutely.
That has been, every year since the day they open their doors, they've been giving a dividend. They have been paying a dividend because they are wildly successful, because all they bank on, or their only variable is, when are we going to die, Jeremy? And so they're really banking on the fact that there's only one variable. They have a whole actuarial team that knows when we're going to die. And so bringing it all full circle, wrapping this up and then continue into this, what I'm saying is, we're designing these boring old permanent life insurance policies in a way that gives you that high early cash value, that gives you the guaranteed growth in cash value that you can use for the banking function. But we can't ever forget, the first step is making sure that you have the discipline and you're the right person, the right partner for one of these mutually owned dividend paying companies. And I think we get away from that a little bit too as practitioners. So I want to just dial in on that a little.
Yeah, because honestly, these policies, they're a privilege. They're not a right.
Yes.
And the hardest part about getting these, one, is finding the practitioner.
Yes.
Finding the person who can design it for banking, and design it not just for banking, but also design it for your tailored banking. The second hardest part is getting through the underwriting process. These companies have been around and been so successful for so long
Yes.
because they're pretty strict.
They're not willy-nilly.
No.
They're not willy-nilly. They're not just approving everybody. And, so, and I guess that was on my heart and wanted to share that here as you're looking for the right person to work with. And you're really trying to understand, like, why would you do this? Why would you want someone that practices this? Because this is a process. This is a process. This is a fundamental shift, a paradigm shift on what you've been taught, how you've been groomed to give up your control of your money. And this is a shift that you want to make sure that you understand it fully. You want to make sure that you have someone working with you that can guide you on each step of the way, help you make progress. Because that progress is what leads to happiness. Whether you're someone that's in debt and you're using this for debt, whether you're someone that's going to make major purchases or do a renovation, or you're someone that's ready to do investing. You're ready, not speculation. I'm not talking about just tying your money to a market and seeing what happens. And we're going to dive into that vehicle here at some point today.
Yeah.
Right? Speculative stuff where we're just like, well, I hope it goes up. It might go down. I don't have any idea, but I'm good with that. But we want to make sure you have a solid foundation.
I want guarantees in my life.
Me
Personally,
too.
that helps me sleep better at night, right? So by practicing infinite banking, you do have guarantees. It is a contract at the end of the day between you, the insured or the policy owner, and the mutual company, the insurance company. That is a contract, which is amazing if you really think about it, because all that growth, everything that happens inside of it, it's a private contract between me, private citizen, and them, private company, meaning Uncle Sam doesn't have to get involved. They're not going to tax my growth that's inside of there. And when I take policy loans, there's no reporting to the IRS. Did you know this, Jason? If you make a transaction with a normal checking or savings account and about $10,000, did you know that's reported to the IRS?
I do now.
Yeah.
I did not know that.
Uncle Sam's always watching.
Always.
But not
always.
when you have these private contracts.
Yes.
And because they are private contracts and they are so secure, guess what that is? It's an asset as well. When you're going through the traditional, like I've been through underwriting processes with banks before. They looked at my net worth. Guess what counts for it? The cash value inside my whole life policies. Why do banks like that?
I think it's a number 2 item on the things they look at, right? That you look at your cash and then you look at your whole life.
Well, they understand it because they have bank-owned life insurance, BOLI, over $200 billion. And
225 as of Q2 of 2024. And if you guys think about that, that is almost a year ago. So that number is drastically increased.
And we have a whole podcast episode on bank-owned life insurance. So if you want to learn more on that, just go subscribe, do the things, and check out that episode.
And yes, go do all those things that Jeremy just said. And when we're talking about who do you want to watch out for? Well, one thing, like, how do you identify red flags? The easiest question I've learned over the last couple of years is just ask the person, hey, and you don't have to be mean about it. Just, hey, how is this working out in your life? How has this changed your life? Tell me about your experience. Walk me through what you've used this for. Because again, if it's specially engineered for you, no matter where you're at, like even if you have the same problem with someone else, well, I guarantee you probably don't have the same outcome that you're looking for. You're probably not exactly the same age. You don't have the same background. You know what I mean? Like that's why it has to be engineered for each person.
Absolutely. It's a individualized banking system. And so let's get into a couple of common mistakes. Well, we're kind of rambling at this point. Let's get into the nitty gritty. You agree?
I agree.
So what are some common mistakes for untrained agents out there? Well, buying a whole life policy that wasn't designed for infinite banking, the ones that delay the cash value. When the Dave Ramseys of the world say that whole life insurance is a terrible place to park your money because you can't access it for a number of years, yeah, that's true. When Jake from State Farm designed it, or your cousin, or someone who wasn't trained by the Nelson Nash Institute, but properly designed IBC policies, they have cash value available from day one. Cash value that you can access within the first 30 days of the policy being built. And the problem that you'll find is a person who's not trained in IBC, they'll either put too much premium going towards the death benefit, or they're going to build it to where you have limited access to the actual cash value. And then you can take years and years to actually be able to use the banking system that was designed for you. By working with a certified IBC practitioner, you have a banking system that was built for banking from day one to capture that guaranteed growth, to get those dividends that you can start using to either pay down debts, use it in an opportunity fund, or start planning for your legacy.
Yes, because at the end of the day, we finance everything we buy. You're either going to pay interest, earn interest, or if you pay cash, give up the opportunity to earn interest. And so your regular old whole life, like if you have a regular old whole life, it might be super valuable. it depending on how much you're putting in there, like don't go you try to use it for banking, but if you have cash value in it, don't get rid of it. It might be
No.
super valuable. So just so some people come to me and they're like, "Hey, I have this 10-year-old whole life and I just want to get rid of it and just do this." I'm like, "No, maybe you do this and that." But when we're talking about banking, if you're talking about the financing of things in your life, then you want someone who is helping you reach those goals. If someone's telling you you got to wait 3 to 5 years before you have cash value, that is not for infinite banking. That is not being set up in your favor. That is being set up because the person is going to be making commission on 100% of
Hmm.
what they're setting up. Versus every practitioner, we're kind of crazy because we're going to give up between 60 to 70+% of our commissions to
Up to
make
90.
sure, yeah, 60 to 90% to make sure that you get what you need first. And you know what that does? That's us showing you that we are here for you. We are giving so you guys get what you need, and then you're able to come back and you're going to do more because you're going to build a whole system. You're going to be like, wait, the banking of Huggins, the bank of Huggins, the bank of Sipple, the bank of your last name. Pick your bank name, and you come back and you'll be like, I want to expand my system.
Hmm.
We've pulled all of this capital that used to leave. We used to pay all these other families, and now we learned how to use this system that you set up for us. And now we've recaptured $20,000 a year or 35. We give ourselves a 35% raise.
Hmm.
Like there's all these different directions we go, but you don't want to see that you're not going to have cash value to 3 to 5 years. That's an immediate red flag.
Yeah. So what's another red flag?
Another one is, are they practicing it? I mentioned that as a question, but are they actually doing the thing? Like that is one of my favorite questions now. Like if I talk to anybody who wants me to invest money or wants me to do something, I'm like, oh, cool. Tell me about your experience with it. Tell me how it's going for you. Because if they're not practicing it, how could they possibly know it? I tell people that all the time, Jeremy.
Hmm.
Like I talk to people, it's like, I've read Nelson's book. I read What Would the Rockefellers Do? I've read and I've been watching, YouTube videos for the last 2 years and TikTok videos and every other video out there and reading about it. I know everything. I'm like, cool. How many policies do you have? Zero. Like, how could you know anything?
Well, I look at that kind of akin to the person who gets fitness advice from someone who never worked out.
Yes. Yeah. So you're taking nutrition advice from someone who definitely looks like they're not following their own plan. Like that was kind of we were talking about earlier. And I was like, yeah, it's kind of a mean example, but it's a true example. Like you want to, you want to find people. Tony Robbins talks about this. Success leaves clues. Go find somebody who's accomplished the thing you want to accomplish and just model them. You don't have to recreate the wheel.
We didn't create any of this, actually.
No, no, none of it. And we went through certification exams and tests and learned from PhD economists and people I thought I would never hear from. But why do we do that? Because we understand the power of this. When you understand how true something is, you're willing to work a lot harder at it.
What's a it can be a financial foundation for literally everything that you do. Again, you can use it to pay down debts. You can use it as an opportunity fund. You can use it for legacy planning. And then even within the IBC practitioner community, the way that I practice IBC is different from you. So
Yes.
I work with who predominantly? I work with a lot of ambitious entrepreneurs. I work with a lot of ambitious professionals, and I work with a lot of airline pilots. Why? Because that's who I am. I
Yes.
use my banking policies as a wealth builder, as an opportunity fund. When it comes to the airlines, I know the struggles, I know the volatility of that industry, and I know how IBC can create that safety net, that foundation, using it as an emergency in case something happens. COVID, not great for the airlines. 9/11, not great for the airlines.
Mm.
But people who control the banking functions in their life, the ones that were able to use this as a foundation to get through those hard times, they weren't becoming truck drivers, right? They've still had the ability to take care of their homes, to pay their mortgages. When your money is not tied to a market, when you control the banking function, when you are the builder, right? We talked about being borrowers and being builders. When
Yes.
you're the builder, you have full financial control.
And that's it. And then, you're talking about your audience. I mean, there are audiences overlap, but I focus on who I was 4 years ago. Someone who was earning a decent amount of money, $180,000 a year in corporate America, but I was so scared around money. Being a father of two boys and married, and I was like, man, everything just feels like paycheck to paycheck, even when I wasn't.
Mhm.
because my mindset around money was so scarce. I was so afraid because I didn't understand it. I didn't understand the game. And that's really what I focus on, is how do I help people feel like they have freedom? And you have that when you start becoming the person that has control of the scenario. You're no longer giving up your control. You're no longer going to a financial advisor who's telling you, yeah, you're in it for the long haul. Just leave your money in there. You know, the market does this over this many years and all this. It's like, well, how does that help you today with your cash flow? You know, how does that help you right now? How does it's helping your future self? Maybe there's so many variables tied to it, but like, how does that help you? So the game of money never made sense until I read Nelson's book. Like my advisor or my mentor is a fiduciary. Like Brian Reppel is a fiduciary with 40 wealth management offices. He has 80 of these policies. He learned
Oh,
directly
wow.
from R. Nelson Nash. He started his first policy in 2007 to compare it to a Roth IRA and to see which one worked better. Guess which one works better?
Something that's not tied to a market that
Something
has
that's
guaranteed growth.
something that's not tied to a market. And he didn't put very much in that, but he's used that for investments at this point. He uses that for his day trading, for putting a new roof on his home. Whatever he's needed financially, he always says, this is the foundation. This is your and play. This is your and. You don't go and like, I'm going to do this, or I'm going to have money in this bucket and this bucket and this bucket. You want to have a foundation. And once people understand this, Jeremy, I think once you understand what the game is, you know what to do. And what we are dedicated to is making sure that people have as much information as possible. But at the end of the day, it's like my wife says, you either jump or you don't. Like you either jump or take action or you don't. But it's really, if you give yourself the information, if you learn who you want to work with and to be able to spot people who aren't looking out for you, then you'll know what to do. Now there's a word that I think is kind of a curse word in the banking industry, and so we're going to segue to that a little bit. But, you know, this curse word starts with an I and ends with an L. And
And
it kind of hurts me to say it. So I'm going to let my partner Jeremy here talk about it for a second.
yeah,
So,
IUL, Index Universal Life. So there's a lot of practitioners, and I put that in quotes, who say Index Universal Life is practicing IBC, but better, right? But
yes.
how can you practice infinite banking when you're using a product that doesn't have guarantees, that's tied to a market, that has increasing costs and fees over time that eat into your ability to bank?
Yes.
IULs, they were designed as a substitute in the 80s for all the people that were leaving insurance and moving to the stock market. And so these insurance companies said, hey, how can we get these people back? Well, let's take something that was guaranteed and bastardize it, and we'll tie it to a market, and we're not going to give them the guarantees. We're going to put the onus on them to make the good decisions. Oh, and by the way, every single year, we're going to charge them more because this is nothing more than continuously renewable term insurance. So every single year, the cost of insurance goes up. And if your cash value didn't go up to offset that cost, they're going to pull it out. They're going to pull it out and help pay for that cost of insurance.
And what you guys are all going to see, and we're going to cover this in a whole episode, but what you're going to see, and we're just giving this because I used to be agnostic. Like my mentor, like, who I mentioned, brought me to an IUL training for banking to just learn. Like, why not learn what people are saying will work or how it will work? And I learned, I was actually contracted to do this. But what I found is in good consciousness or good conscience, I couldn't sell this to anybody because I would never buy it, Jeremy.
Mm-hmm.
Like I never even told you this part of the story. Like I learned how to do illustrations with IULs. I was able to, I read a book who a guy who practices and teaches, and I actually think he's probably a really good guy. But at the end of the day, I've had so many calls where someone is in pain because of that being sold an IUL and then the restrictions it puts on them. It doesn't perform the way that they say they're going to because the market goes up and it goes down. And the contract is not unilateral. It is a contract where you, the person who bought the contract, is taking on all the risk versus in permanent life insurance, which, oh, by the way, has been around a lot longer since 1980.
Yep.
Right. So when you guys are looking how you're going to build your foundation, do you want to build it with something that families, historic families like the Rockefellers, the Rothschilds, Walt Disney, Ray Kroc, whatever you think of, you know, McDonald's and the food and how it is, but still, do you want to go with something that's been around and proven for 200 plus years and the only way that it fails is you, the person in the mirror, Or do you want to have it tied to all these other variables? I know as someone who loves science, when we're trying to go through an experiment and solve a hypothesis, you want as little variables as possible.
Yeah.
And you want to be the one in charge of it so you can make the adjustments. That's what permanent whole life is versus an IUL where the contract is not in your favor because insurance company, if they're not profitable, they can change a couple things.
They sure can. And you also need to ask yourself, do you want to use the product that the banks themselves are using, which is
Yes.
permanent whole life?
Yes.
Or do you want to use index universal life or variable universal life? Just follow what the banks are doing. Again, we're not reinventing anything. We're
No.
just being good copycats of a successful system that's been around for over 200 years. But guess what? If you want to tie your money up in the stock market, you can. That's what I like about IBC. You can use it as an opportunity fund. Again, it's a financial foundation. You put the money in, you take a policy loan, and then go out and invest it. But at least secure your principal, at least get the guaranteed growth. And for all my technical savvy people out there who say, well, Jeremy, how do you get a policy loan? What's the structure look like? Guess what? You log in to your system, right? Just like you would your Wells Fargo, your Bank of America. There's a little button that says policy service request. You go to that button, you click it, and you say policy loan. Type in your name, put in your account information, and then within 24 hours, depending if it's a Friday or Monday, it'll show up into your regular checking account, at which point you can throw it into a market. You can throw it into a real estate deal. You can use it to pay down debts. You can have
Wait, I
your
mean, they
cake.
don't have you they don't have you bend over and like turn around twice and
No,
no, they don't ask you about your mom's maiden name and
there's no one coming between you and your money.
no, really?
Nope.
No. I heard they ask you two questions. I heard they ask you, do you want the money mailed to you in a check or do you want direct deposit? Jeremy just went right to the direct deposit, but you have another option, folks. You do have one other option.
Yeah, you could have it mailed to you, but you don't have to
Some people
tie
like
it.
checks in the mail. Like if you want me just to send you, something in the mail, you can just ask me and I'll send you something. But use the online system. It's probably smoother.
It's quicker if you want your money quicker.
Yes.
So, and you want access to your money quicker. Let me put it that way. For the traditional underwriting, if you're going out for a bank loan or a line of credit, I mean, that can be months and months. As someone who, as a real estate investor, have used banks before, I'm going to tell you, they want your first name, last name, social, first child, your kidney, anything that you can get before they're going to give you the money. And then, by the way, when they give it to you, it's on their terms, usually unfavorable for you.
Yeah, 100%. Because if you just think like let's make this an act of faith and logic. Okay. If you just think, why would a bank ever give you a loan? Anyone listening who has, a car note, a mortgage, a personal line of credit, anything, credit cards, when you're getting all those pieces of mail, what is it? That's marketing. What is marketing meant for? To create sales. What does sales do? It drives money. It creates money for whoever is making the sale. So a bank is never being like, Jeremy, old buddy, can't do this when we're in, across from each other in a camera. Jeremy, you're the best. I want you to have a new car. I want to give you a loan so you can have that car of your dreams and it's going to be okay. You're going to love it, man. The ride is so smooth, everything. And all you're going to do is you're going to pay me a simple 5 or 6%. It's not a big deal. It fits into your monthly budget. The banks, folks, are giving you money because they make money. Again, you either pay interest, earn interest, or you give up the opportunity to earn interest. So if we just start thinking logically, what would it be like to control the banking function? Why would you want to work with someone who understands this in depth, understands the difference between Austrian economics and the system that we're in, which I can't even explain?
Well, it's the borrower system. It's
Well, the
this.
borrower system, but I mean like the economic principles that we're practicing as a country. I actually read about it and I was so confused how this can make any kind of sense. It's like, and the people are like, oh, this will work, like Keynesian theory and all the other theories. I was like, man, I don't get that at all. It doesn't make any sense.
Yeah, well, I don't understand socialism either, but that's popular in some countries.
It is. It's popular because people care, right? People care and they want people to be taken care of. But if you're not willing to do the work, then, you know, I mean, back when we were hunters and gatherers, if you didn't hunt or gather, you're probably not lasting very long, were you?
No, absolutely not.
No, no.
So what's another common mistake? How about this one? Ignoring what is meaningful and manageable for the actual member. A lot of folks will go out and they'll design a policy and they'll call it IBC. They'll just be a cookie cutter. Hey, we know that we do percentage to base, this percentage over the PUAs, and we're going to call it IBC.
Mm-hmm.
But they didn't take the time to understand you. They didn't take the time to understand your banking needs. Like when I worked with a pilot once. He said, "Hey, Jeremy, I went through this really nasty divorce. My ex-wife, I had to, forego a lot of this 401k, and I had to, give up a lot of the investments. I need to get that back because I'm in my mid 50s. I've only got X number of years. Mandatory retirement age for the airlines is 65, and I need to get that money back. So I want to use IBC as an opportunity fund and start investing again." As we dug deeper into his financial situation, what he really needed was to get out of these debts. The way that I designed his policy went from opportunity fund to debt consolidation, right?
Which is a big difference. If you guys, if you're new to this and you're hearing this for the first time, the difference in how you're going to design the two things is wildly different.
Yeah.
Wildly different.
It has to be uniquely tailored to that person's experience. And you know what's nice about it? Because he's using it now for debt consolidation, he's freeing up cash flow. He's getting control of his banking function. Guess what is another branch of his bank's going to do? You don't have to have just one policy. I have multiple policies. My wife has multiple policies.
Yes.
You can create other branches of your bank. You don't have to set it and forget it. It's like, oh, once I create branch number one, it's always going to be debt. Well, Jeremy, how am I going to build wealth over time? You're going to build wealth in the first policy. We can do it faster with another design, but that's a second branch of your bank. Over time, when you're thinking long term, you're going to get there at the same destination, no matter what. It's just, what are we going to do in the early years, the first 1, 2, 3, 4 years? And that
is the difference between working with someone who's looking out for, like, what is your big vision? What are your big goals? Where are you going in the next decade, the next 20, next 30, next 40, next 50 years? And then be able to pull that all back into the first year, the first 30 days, and tie them together. And that's what we're trying to show you guys. We're trying to say, hey, you want to have someone who's been through it. Like, I have 4 policies in our family, and we'll have a 5th one with my oldest son at some point, but he's got to get the discipline and he's got to get to the point where he is ready to do this. Like, I'm not going to start someone, even if it's for my family, even for the growth of it, unless I know that they're ready. And he comes by after we're doing stuff like this and says, "Hey, this seems like good stuff. Like, I should do that." I'm like, you should put away. You should pay yourself first. You should make sure you're taking care of the discipline, because that's where it comes from. It's really loving yourself a little bit more. It's giving yourself permission to see the big vision, and then having someone that can guide you through it step by step by step. And it's been there. Like, we went from having, and you never, I don't think you had this problem we had, but I made all the financial mistakes, folks. Like, I've lived Parkinson's law, where, our income pretty much matched our expenses at some point, even making $100,000+ a year for a decade plus. And so I went from having $114,000 in bad debt, like $3,300 a month, leaving my family, to being able to use my son's policy, my youngest son's policy, to go skiing for the last couple of years, because it's something that we want to do. We decided as a family that would be what we want to use our system for. And now we have passive income coming, and that's within a period of 4 years. So even though it might be planning for decades, for generations, for things, you first have to have the steps to get there, and you need someone to show you how to do it.
And that's what's great about working with an IBC practitioner, is that you don't have to figure out how to design it. Right? No. Working with someone who actually takes the time to understand your unique financial situation is going to, I think of it kind of like bowling, right? You're bowling, but with bumper lanes. You're not going to roll a gutter ball when you're bowling with an IBC practitioner.
Yes.
You will.
I like that. That's good. You should write that down.
You will roll a gutter ball, or possibility, if you're, throwing the ball in real estate or crypto or whatever asset you have. But what's nice about infinite banking is there is no gutter ball. And if you're working with a practitioner, they're going to make sure that you're at least hitting a pin, if not a spare, if not a strike. We're going to set you up in the best possible means. I will go and bring the little toy thing that you give to the 3-year-old.
That thing's hard, man. The ball always bounces when you roll it down that thing. I don't know about that. I won't bring that to you, folks. I don't like that thing. That thing makes the ball bounce and go crazy, and you're probably going to get like 1 pin.
Well, we're going to set you up as best we can.
I'm going to show you how you just look at the little arrows in the middle, and you just roll towards that. You don't even look at the pins, Jeremy. You just roll towards that, and you're going to get there. You're going to get there because you have someone that's guiding you. That's what Jeremy's saying.
It sounds like you and I are going bowling this evening, and you're going to teach me how to bowl a little bit better, like a Sipple.
Yeah, I mean, I'm not good at bowling, but I'll still beat you. Yeah, okay. I think that's a good thing we should do sometime. So again, today we talked about what are the red flags with And why would it hurt you? Why, with working with the wrong strategist, could cost you thousands? You want to work with someone that's an authorized IBC expert. And yes, we're nerds about this stuff, folks. We're sorry, we're nerds. We're going to talk about numbers. We're going to talk about how this works. And we're going to talk about all of the bells and whistles of why we do this. But at the end of the day, it's a simple system. You want someone that can show you what's manageable, what's meaningful to you, and what steps do you need to take to make that process. So you want to take control of your financial future. Make sure that the person that you're working with is working for you to help you meet your goals, and they know what they want to do. And that's why we're here together. We're going to Nelson Nash think tank. I'm super excited. I've set my intentions of meeting some new people, getting our practitioners, picture, having my wife join me. I'm excited what she's going to have to take away from this, and excited to spend more time with Jeremy and grow what we're doing for you guys. And how about you? What are your intentions as we wrap this up?
So I use it, IBC, different than you. What I'm looking for is someone who has used infinite banking in such a unique way that I haven't even thought about. Whether it's like, hey, Jeremy, I replaced my 529 plan with infinite banking, something so off the wall that we can bring them on as a guest. Ideally, I want to find someone, again, for our audience to learn how to use this for their unique needs. There may be something, a practitioner here who's going to resonate with our audience a little bit better than we can because they share the same story. They're on the same journey. And for those of you who haven't started the journey, well, you're going to be in the same place you were last year until you start taking necessary action, and keep listening, right? Keep listening. But at some point, you do have to take action.
Yeah, keep listening, and don't try to do anything, because you cannot try. You either do or you do not, like Yoda says. He's right behind me on the wall. Jeremy wanted to put Yoda on his shoulder to start this off, but you guys keep learning, keep giving yourself permission. What you don't know, you just don't know yet. We're blessed to be here with you. We're blessed to be able to share this journey with you. It's a lot of fun. It's a lot of work, but it's worth it. So at some point, act. Be like Nike and just do it. Until next time, we'll see you guys soon.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.